Let's define some stock terminology. If this doesn't get your blood pumping, I don't know what will. So first, let's do some definitions. So a stock is a share in the ownership of a company or corporation. This is also known as shares. So a lot of time you'll hear stock and share as kind of interchangeable. Now, one thing to realize, if you own stock in a company, you don't really own anything that the company owns, right? You just have like a voting right. So the thing is, the company owns all of the assets. So if you own stock in a manufacturing company, you really don't own any of the equipment. That equipment is owned by the company. You have no claim to the assets. Just something to keep in mind. Now, things you can do owning stock, or why this is important. Number one, you have the right to vote in shareholder meetings, which means you can influence the future direction of the company. Now, with that being said, if there are 10,000 shareholders or stockholders, and you're only one, you might not have as much influence. But the more shares you own, the more influence you have. So I know I watch a lot of TV, and one of the shows I'm watching right now, somebody's like, I own 40% of the shares of this company. They have a big right. They don't own a majority, but they have 40%. That's a lot. So the more shares you own, the more influence you have. Number two, you can receive dividends. So that's the share of the company's profits, right? Because the stockholders or the shareholders, they're owners of this company. So when the company posts big billion-dollar profits, some of that gets reinvested in the company, and the rest gets divvied out into dividends for the shareholders. Again, the more shares you own, the more dividends you get. And number three, you can also sell your shares to someone else. So the buying and selling of stocks or of shares, right? This is where we get the stock market, because people go back and forth and say, I own 30 shares of Coca-Cola. Do you want those? Yes, I'll trade you for 10 shares of Amazon. And then money also, right? So things go around, all kinds of things like that. Now, why does a company issue stock, right? It seems kind of weird because they're giving away part ownership. But companies issue and sell shares in exchange for money to raise capital. So if you think about this, if you're a company owner and you're like, I want to expand and I want to do all this cool stuff, but it costs money and I'm fresh out, then you're like, okay, I'm going to sell some stock, which gives up part of my ownership, but it gives me some money so then I can expand business operations. I can attempt some new projects. And if I'm expanding and doing new things, I'm probably going to have a higher profitability, which means in the long run, I'm going to earn more money. Now, from a stockholder or a stock purchaser point of view, if you buy stock in a company, you are buying in an investment in the future of the company. So that's where it's one of those things of you buy a bunch of shares and this company goes bankrupt, then you're not so great, right? So you are investing in the future of that company, not only still existing, but doing well, right? More profitability, higher dividends, better for the stockholder. Now, the mutual fund is an investment fund that pulls money from many investors to buy stock and other financial instruments selected by the fund's manager. So if you think about like a general person like me, I know absolutely nothing about the stock market. I don't know what it means if something is doing well. I don't know anything. But there are people in this world who know things, right? A lot of them are financial advisors or whatever. So you give money to them and say, buy me into this mutual fund or whatever. So the manager, the fund's manager, does the buying and selling of stocks to produce income for the fund's investors. So there's one person who maybe represents 50 people in a mutual fund in order to, I guess, be the knowledgeable one, right? Because I don't know anything about it and I don't have time to find out about it. So I invest in a mutual fund where someone else does all of the brain power. So a mutual fund is getting into stocks and different shares of things without having to know much about it, basically. So it's stocks for those of us who know nothing about stocks. So that's just kind of a brief overview of stock terminology.